Gold! The look of it, the taste of it, the smell of it, the texture.
Hey YouTube, it's CryptoOneStop coming to you guys from the Crypto Cave. And today we're going to be talking about putting your gold to work, either by gaining some interest or getting a loan. And we'll be using my Medium article here as a reference. And if you guys wanted to forward to the more relevant parts of the video, I did include a timestamp in the description below. Gold has many purposes. The big four are preserver of wealth, a portfolio diversifier, a reserve currency, and an industrial commodity. For the context of this video and what we're going to be talking about, we're going to really focus on the first two, a preserver of wealth and a portfolio diversifier. Now, with the central bank policies, the race towards zero and quantitative easing have both provided very compelling reasons to own gold today. Mainly for two reasons. One, this is a positive for gold. So people might use gold as a means to preserve their wealth. Also, if you're a portfolio manager, you probably are looking towards maybe allocating some or increasing your gold position given what's happening with the monetary policy. But as an investor, many people frown upon gold. Buffett, who happens or perhaps is the most notable critic of gold, says that he'd rather buy a business or a farm rather than buying gold because gold doesn't generate any revenue. It doesn't create a revenue stream. You can't earn interest on it. And because of that, many investors opt out on buying gold and opt into buying a business, whether it's stocks or actually, owning private equity. But things are changing. The whole macro picture has transformed, especially within the last decade. And because of that, investors are becoming more open-minded about owning gold. And we can see some of the interest in the price. If you look here, the price, it exceeded 1,500 at one point. To illustrate the point, to show you guys how investor sentiment is changing, I'm going to show you guys this clip from CNBC. They interview Sean Matthews, founder and investment officer of Hundius Capital, which is a global asset manager.
You would be investing in precious metals or other safe haven assets right now?
Absolutely. I think you want to look at, certainly on dips, buying precious metals, silver especially, on an inflation-adjusted basis. Silver is actually very cheap and has a lot of room to run. It's caught up to gold as far as a percentage, but it's still lagging a little bit. I think you want to look at copper, and I think copper is a key indicator of what's going to happen as far as what people perceive as global growth. And look, I think there's a fundamental underlying bid for equities at this point in time, and people want to get in them in any sort of positive news that's out there. So that's a trend that I think is in place. However, if we get back to a 2% 10-year, I think people will be talking about, oh no, equities are going to be in trouble. So it's still a tenuous rally at best.
So with that being said, with investor sentiment changing in regards to gold, how do you get the best of two worlds? How do you take advantage of the whole macro picture by allocating to gold, but also get some cash flow, some liquidity? Well, that's where the PAXG Token comes in. Paxos has effectively digitized gold. If you don't know who Paxos was, they're the creators of Paxos Standard, which is a digitized form of USD, similar to TUSD or USDT. So it's basically a USD-based stablecoin. They partnered with Binance to create Binance's proprietary BUSD, which is again USD-based stablecoin. And most importantly, they found a way to digitize gold. And their digital gold token is called PAXG. And they've actually partnered with a lot of different platforms to make this happen. So that way it's tradable. You're able to use it to earn interest or to use as collateral for a loan. So they've worked with a bunch of different people to make this happen. And PAXG is a ERC20 based token, so it runs on the Ethereum blockchain, which makes it easily transferable, tradable, exchangeable, and all that good stuff. So you basically get all the benefits of blockchain space. Also, it gives you exposure to gold because that token that you own, the ERC20 token, PAXG, is redeemable for gold. There's actually a process in place for you to take that gold token and you can redeem it for a LBMA accredited good delivery gold bullion bar. And I think this is the trend. First you see gold digitized, once this becomes, widely available, acceptable, tradable, and is in high demand, once that's taken care of, I think other assets will also be digitized. I wouldn't be surprised if they're able to digitize silver next. And because you're able to digitize, these commodities like silver and gold, it allows investors who normally buy these types of assets, whether it's to diversify their portfolio or to preserve their wealth, they basically buy these physical assets, put them in a safe, and that's it. They really can't put them to work. Now that they're tokenized, it makes it possible to build financial services around these tokens. For example, you can go on your Crypto.com app, and if you guys wanted to learn more about Crypto.com and the services that they provide, I'll include a tag and an annotation at the end of the video to a link so you guys can get a full comprehensive review. But this is my Crypto.com app. And you can see here at the bottom, they've listed PAX Gold. You click here and you can actually buy the PAXG token by clicking here on the plus sign. And so there's a few ways for you to do that. Your credit card, if you have a crypto wallet, you can exchange Bitcoin or the Crypto.com coin for the PAXG token. And also if you happen to deposit dollars from your bank account to the Crypto.com app, you can use those funds as well. Once you've purchased your PAXG token, you come to the navigation screen and you tap Earn. And from this screen, you click the plus sign because you want to add a loan. And you go ahead and you pick the asset that you want to lend out, PAXG token. And then you select one of their terms. So you can do flexible, which allows you to withdraw your tokens at any time. A 1 month term means you would lock your PAXG token, but they would give you a higher rate. And for a 3 month term, they'll give you their best rate of 8%. And remember, the minimum to lock up a PAXG loan is 0.1 PAXG token. So if you plan on doing this, make sure you buy at least 0.1. To show you guys how this works and what kind of gains you're looking at, I'm going to use Bitcoin as an example. So I lent out 1 BTC at 8%. Now, if you lent out 1 PAXG token at 8%, you'd be getting, in terms of the amount of token, you'll be getting the same amount of token that you see here that are earned on October 21st and the other days. So let's do the math. If, let's say, you got 1 PAXG token valued at $1,500, let's use that number for simple math. So 1,500 times this right here, 0.001534425, equals the dollar value. So you're basically getting $2.30 a week. Now, it doesn't seem like much, right? Because it's just one payment. But if you take that times 52, because if you earn 8% for the entire year, that equates to $119. So how much is 119 of 1,500? It's 0.079. In other words, it's 7.9%, so roughly 8%. To me, this is the equivalent of dollar cost averaging in. So imagine using your base asset, in this case is PAXG, using that to buy more PAXG, using that to buy more digital gold. So you're basically dollar cost averaging into gold without having to put in additional capital. And this is what they call a return multiplier. So the base asset is earning interest, and that interest that you're earning can also appreciate in value. This number that you see here, that the $119 that you're making annually, is based on the price of gold being at $1,500. Now, if the price of gold were to double, you're actually getting paid $220. And if you think about it, your base was $1,500, right? You're basically now getting 16% off your base principal that you originally invested. So that's what they call a return multiplier. So not only is your base asset going up in price, but the interest that you're earning is also going up in price because you're getting paid in that base commodity. And with that additional liquidity, and you can accumulate PAXG, or you can use that liquidity for everyday spending, or perhaps you want to diversify into something else. And in my view, that's much better than keeping gold locked away in a vault where you don't earn any interest. Now, the other thing you can do is you can actually take your PAXG token, which is going to be available on NEXO very shortly. So you'll be able to use your PAXG token as collateral. With that collateral, you can get a loan. For example, You can see here that I have Bitcoin, and the amount of Bitcoin is valued at 7,400. And the loan to value ratio for Bitcoin is pretty high relative to the other currencies that they support. But with that Bitcoin collateral of $7,400, I can get a credit line of $3,900. And unlike a conventional loan, when you take a collateralized loan out through a platform like NEXO, you don't pay any of the interest on the principal that you take out. Let's say I take out $1,500 and they charge me 10% on that. I'm not going to be paying back the base principal plus interest. I'll just pay back the interest that I owe. In theory, you can carry that loan indefinitely. Some platforms do mandate a maximum term. So basically, it provides you an inexpensive means to gain additional liquidity. So now with that $3,900, I can actually either diversify into other assets, or maybe I want to use it to cover a short-term expense without producing a taxable event. Because when you do this, you're basically getting extra cash, but you don't have to pay taxes on, because technically you're not selling it. You're putting it up as collateral. So people use this method to gain short to medium term liquidity for various reasons, precisely because it's not a taxable event. And all you have to do to close out the loan is repay back the base principal and pay back any outstanding interest. And this makes sense when you're buying an asset that you expect to appreciate in value. For example, you expect gold to go up in value in the next couple years, but you have maybe short-term demands, or maybe you just want to maximize your gains by diversifying your portfolio, maybe using that credit line to buy a house, equities, or altcoins. Now you can keep your exposure to Bitcoin, other crypto assets, or gold, and simultaneously put it to work for you. Now, I want to advise some caution. This may sound very appealing, but there are risks associated with this. Imagine if you bought Bitcoin, which is hyper volatile relative to traditional assets like gold. If you bought Bitcoin, let's say at 20,000 to take out a loan for 10,000, Bitcoin fell from 20,000 to 3,000. During that process, if you didn't pay back the loan plus the interest that you owed, maybe you decided to take that 10,000 and buy more Bitcoin, or maybe you decided to buy alts. When Bitcoin fell from 20,000 to 3,000, either one of two things would have happened. You would have had to liquidate some of your Bitcoin, or you would have had to buy more Bitcoin to adequately collateralize your loan. But meanwhile, if you owned gold at that time and you used gold to take out a loan, you probably would have been better off, because the volatility relative to Bitcoin is very low. I mean, gold during that period didn't fall as much. In fact, it rose. So if you're a traditional investor, you're not really, a crypto enthusiast or believer in the technology or Bitcoin in general, you can still use some of the finance services here, put your gold to more productive use. Now, whether you're a gold bug or a crypto bug, here you can see I've laid out the instructions in my article how to lend out your PAXG token. So if you go to my Medium article and you're more interested in a written format, you guys can read this article and I'll show you step by step how to lend your PAXG token out. For those of you who are crypto bulls out there who have a bullish outlook for the crypto space, and I've actually made a video I'll be releasing maybe this weekend or the week after, where I outline my strategy for leveraging my crypto assets to diversify my portfolio so I can maximize the gains from the upcoming rally. And I've also produced other content as well, including this video that I mentioned earlier in my video. I also have a video on NEXO you guys can check out. I'll make sure to include a tag. Just click at the upper right hand corner of the screen. Now I'll end the video with one final point. The system is rigged to raise the price of equities and real estate. That's just the reality. And the financial elite know this. This is why they use services like this to get a loan on their equities. They'll buy stock, the stock will appreciate in value, and then they'll use that stock as collateral to get a loan to buy real estate, because they know that the price of real estate and equities is inevitably going to go up because of central banks' policies. So with the knowledge, with the right tools, they're able to leverage their wealth and maximize their gains, and even further extend their lead over the retail masses. Now, with the new financial services becoming widely available to the retail investor, we now have the chance to to actually catch up and close the gap that the elites have on. I'm not suggesting that you take all your money and deploy this strategy. What I'm suggesting to you is to have a diversified strategy. They always say you have to have a diversified portfolio, but they never mention having a diversified strategy. So what I'm doing is I'm earning interest. I have, some locked away on cold storage. I have stocks. I have bonds. I have a 401k. But why not use and leverage some of the newly available tools to optimize my gains? You guys might find it too risky to deploy this strategy, or maybe it's not right for you, but it's at least worth looking into. That way you know what your options are in case your investment strategy or thesis changes. That pretty much wraps up my video, but before I close, I wanted to show you guys this new app that I've been using. I wanted to use something different because Coinbase increased their fees, and I wanted to see if there's any platforms out there that offered a no-fee service. And I came upon this app called Voyager. And so I'm making a full review video, but I'm going to give you guys a sneak peek. This is probably one of the most smoothest, easy to use apps out there. I was able to link my Chase account within minutes, and after linking it, I was able to do a deposit into my Voyager app, and I was able to use those funds to trade immediately. And right now, as a promotion, they're offering $25 in Bitcoin for free. And you can see here, I've already been paid my $25 if you trade $100 or more in cryptocurrency. So basically transfer $100, exchange it for any crypto or a combination of cryptos, and they'll credit you $25. And if you don't get that $25 immediately or within a day, make sure to email them. Let them know that you used my referral link and you didn't get the $25, and they'll credit you right away. So those of you who are looking for a alternative to Coinbase, or maybe you're looking to just get that free $25 in Bitcoin, you guys should check Voyager out. I'll include a link in the description below. If you use that referral link and you buy $100 worth of any crypto, again, you will get $25 worth of BTC for free. With that being said, I hope you guys have a good rest of the day. This is CryptoOneStop signing out. Talk to you folks next time. Bye.